using the machinery, that's when you start using depreciation expense. So depending on what method you're going to use to recognize your business income, make sure that you're recognizing revenues and then taking a depreciation expense against that.
Now, what's the lifeline on a M2 Pro, for example? What would you say?
That's a good one. That's a good one. It could be argued. Um, so the M2 Pro has something called the health, right? So the more MXCs that you take out affects your health, affects your mining rewards in the future. But as long as the coin is viable and able to operate, the machinery should have a useful lifetime. So usually for computers, we look at around 3 to 5 years, 5 years being like the tops. But for something of this nature, since the technology is moving so quickly, I think you can argue 3 years as
Okay, you guys said it three right now.
so if you're mining your crypto, that would be more considered to be active business income. So you would treat it like a business. Whereas if you are, purchasing crypto, holding it, and then selling it or exchanging it for another crypto later on, that would be a bit more considered to be capital gains. Capital gains, at least in Canada, are only taxed at 50%. So 50% of your capital gains is taxable, and that 50% will be multiplied by your applicable rate depending on how much income you've made in the year. But when you're mining tokens, it's considered to be property still, because it can be argued that what you're doing essentially is creating property on the blockchain by mining. Um, so what that means is that you're adding more coins in circulation in the blockchain, and coins are not cryptocurrency is not considered to be a cash, uh, like a cash yet. It's considered to be an asset instead. It's considered to be property. And so when you're adding property to the blockchain, you're effectively only going to be recognizing that property as revenue at the time that you dispose of it, or at the time that you trade it into cash. So that's my understanding of it. But both ways can be argued. So I do understand where you're coming from as well. But it's a very conservative way to recognize it as um, as active business income and then capital gains in the future. And then I guess what I'm talking about is a little more of an aggressive accounting way. Okay, from Coinbase. Yeah, Coinbase has one. Crypto.com has one, and then ShakePay has one as well. These cards are very useful tools. I mean, us at Helium Deploy, we use them quite a bit. It's a very useful tool for you to kind of exchange your tokens, whether they be HNT, or any other token that's accepted on those platforms. You're able to convert those tokens into cash. So the way that works is it's a Visa card, right? It's a prepaid Visa card. So you use that Visa card to purchase items, like everyday items, anything that can be purchased with a Visa, so like a TV, for example, or new clothing. And then the balance of that prepaid Visa card will be used against your tokens. So you can use those tokens to basically balance your prepaid Visa card. So I think right now it's the best way to spend your cryptocurrencies in like real life examples. Very minimal fees in doing this. So definitely something